was the sector performance for 2023. And I have these in order. The best performing sector was the technology sector, which may seem obvious. And I'm going to comment after each sector, just so you know. So technology was up about 54%. It is very rare that you get a technology. As a matter of fact, it's never happened before, where you get an outperformance like this to this degree in the technology sector, and it's repeated the next year. Okay, now that doesn't mean it can't happen, but it has never happened where you get this kind of performance, 20% plus, to where the very next year you get the same performance. So keep an eye on that for 2024. Construction sector up greater than 50%. It's about 50.02, somewhere in that range. Interesting, given mortgage rates rose. So that tells you that the Fed's rate hikes have not bitten into construction yet. Information technology, some people might say that's directing technology. I look at that as more hardware, more of your Microsofts and a little bit of chip stocks, although a lot of that goes in technology. Almost 21% better. Again, same scenario as technology. Difficult to repeat that, although it's easier for the hardware sector to repeat it because demand tends to be a trend and not a one-off event. Communication services, internet stocks, that's basically what this is. A little bit of mobile technology, mobile phones, cell phones, did pretty well, 17.9%, outperforming the broader indices if you look at the S&P and the Dow. I don't have an honest opinion on communication services. For me, as you see advertising drop off of the communication services sites, and they're starting to perform less and less, save for sites like Pinterest and the like, who actually show products, then promote those products. Amazon falls into that as well. I suspect this will underperform a little bit as well. Now, consumer discretionary. So that would be luxury goods, really, things you spend your extra money on, plus 15.6%. That is going to be the fulcrum for 2024, in my opinion. If luxury goods continue to do well, and you have consumer staples do well, that's a sign of an overall strong economy. You can see if we jump down to the bottom, the consumer staples are actually down almost 2% last year. Okay, so when you talk about that, you're talking about a fractured economy. Okay, not an economy that was strong across the board, but a fractured economy. And this might actually give a little credence to why data was good, but people felt bad, specifically in the US. Okay, because consumer staples didn't do well, because consumer staples is middle class and lower in terms of the socioeconomic scale. Consumer discretionary is upper middle class and higher. And that's the fracture that we saw in the economy. And I would argue that today's non-farm payrolls played out that same way, because we had a very strong headline number in non-farm payrolls, but underneath you saw a drop of almost 700,000 jobs in the private sector. That means that private sector jobs were lost, and those people started to go to part-time work to make up for it, which would again separate the haves from the have-nots. Something to keep an eye on for 2024. Industrials, 15.43 to the positive. Materials, 10.17 to the positive. I put those two together because those are baseline strong economic indicators. Now, they underperformed 2022. So it was actually less of a move higher for those two. So that was a little bit of shifting from industrial materials into technology, but also a little bit of slowing economy in there as well, despite the outperformance. Real estate, plus 7.8%. Again, the Federal Reserve hikes have not really bitten the way that the Fed had hoped. That's what Milton Friedman called the long and variable lags. Okay, we might start to see some of that bite as we go into 2024, although you may be aware that as we came into the end of 2023, yields actually fell. So keep an eye on that. Healthcare is one I think personally, this is not TradeZero's opinion, this is my opinion, and I don't recommend you trade off of it. I think healthcare might outperform in 2024. That might be one to keep an eye on. If you like certain healthcare stocks, watch your charts, watch your own personal processes, and see if it signals along, because I think that could be a good sector for next year. Same thing with consumer staples. energy, to a certain degree financials, although we're only 10 months removed from a banking crisis, a bank failure, along with the Treasury bailing out a couple of other banks. So I'm not ready to say that financials might outperform. And then utilities being a defensive sector, that's, it depends. Really depends on how the overall market goes.